Gold is dropping, and the next 24 hours could decide whether this is just a pullback or the beginning of a much bigger move. Gold price today has fallen toward $4,045 per ounce as the US dollar climbs near a one-month high. But that's not the biggest story. Tomorrow, the Federal Reserve makes its interest rate decision, and expectations have changed dramatically. Markets are now pricing roughly a 38% probability of a 25 basis point rate hike. Just 1 week ago, that probability was only 16%, and by September, markets are pricing roughly an 81% chance of a rate increase. That shift is extremely important for gold, because gold doesn't pay interest. When investors expect higher US interest rates, Treasury yields and the dollar can become more attractive, creating pressure on XAUUSD, and we're already seeing part of that pressure today. Spot gold is down roughly 0.7% around $4,045, while the US dollar is trading near its strongest level in almost a month. But here's where the gold price prediction gets interesting. Gold is not collapsing. Instead, XAUUSD remains trapped inside a major range between roughly $3,950 and $4,200. And that means tomorrow's Federal Reserve decision could become the catalyst that finally breaks this range. There are two scenarios every gold trader should be watching. Scenario 1. The Fed turns hawkish. If the Federal Reserve signals that inflation remains too high and another rate increase may be necessary, the dollar and Treasury yields could strengthen further. That could push gold toward $4,000. And if $4,000 fails decisively, attention could quickly shift toward the lower end of the current range near $3,950. But scenario 2 could be even more explosive. If the Fed holds rates steady and delivers a softer than expected message, expectations for future rate increases could fall. That could weaken the dollar, reduce pressure from yields, and bring gold buyers back into the market. In that scenario, $4,100 becomes important again, and if buyers eventually force XAUUSD above $4,200, the entire technical picture could change. But there's another part of this gold story that short-term price action doesn't show. Institutional demand hasn't disappeared. World Gold Council data shows global physically backed gold ETFs recorded approximately $8 billion of net inflows during the first half of 2026. That's despite investors pulling roughly $8.9 billion from gold ETFs during June alone. Total global gold ETF holdings finished June at approximately 4,047 tons. So beneath today's volatility, substantial long-term investment exposure to gold remains in place. And now we have a major collision developing. On one side, gold has long-term institutional demand and enormous geopolitical and macroeconomic uncertainty. On the other side, we have a stronger US dollar and rapidly rising expectations for higher Federal Reserve interest rates. Tomorrow could tell us which side wins. So here are the levels I'm watching. $4,000 is the major psychological level below the market. $3,950 marks the lower area of the broader trading range. On the upside, $4,100 is the first major area buyers need to reclaim. And $4,200 is the level that could completely change the conversation. A strong breakout above that area could put the gold bulls firmly back in control. But a decisive breakdown below the current range could signal that gold's correction has further to run. And remember, tomorrow isn't only about whether the Federal Reserve changes interest rates. The language from the Fed could be even more important. One hawkish message could strengthen the dollar and pressure gold. One dovish surprise could send traders rushing in the opposite direction. That's why the next 24 hours could be critical for the gold price. Gold is sitting near $4,045. The dollar is strengthening. Rate hike expectations are surging, and the Federal Reserve is about to make its move. The question now is simple. Does gold lose $4,000? Or does tomorrow's Fed decision become the catalyst that sends XAUUSD back toward $4,200 and beyond? Follow MarketPulse 360, because as soon as the Federal Reserve decision hits, we'll break down the gold reaction, the key levels, and what could happen next.